Hey friends, it is Kevin Gehring, your Sacramento, Stockton area realtor and lender, here with another edition of Kevin's Weekly Real Estate Report. Now, before I get into the report for this week, I want to let you know that I started a whole new series of videos that I'm starting to put out. I started one this week, kind of an introduction of what I'm going to do. But what it is, I'm going to call it the Dirty Little Secret or Dirty Little Secrets. And what I'm doing is I'm exposing some of the secrets of real estate and mortgages, things that people, only a few of my clients have been brave enough to ask. You know, I'm doing a loan application. They'll kind of scratch their head and say, Kevin, I'm sorry, I got to ask, how exactly do you get paid? I'm tired of hearing people come to me in the real estate side saying, Kevin, you know, I just got to tell you, man, I just got such a great deal with this agent. I'm like, really? Tell me about this deal. Kevin, man, I listed 3 homes with them and get this. They're only charging me 5% commission on each one. I'm like, well, that's sort of what everybody charges. So no, you didn't get a good deal. So I want to talk to you about all these things. I want to show you how to shop mortgages. I want to show you how to negotiate with realtors to get a better deal. I want to talk about some of the other things that are happening in the industry, if you're interested in that. So that's what's going on. So look for that. I'd love to get some good feedback on that, if you don't mind. But anyway, let's talk about the weekly real estate report, this week's chart. Let me take you over to the chart and show you what's going on. So I've been talking a lot about the amount of homes on the market right here, how it has dropped, but this lower plateau is somewhat normal. And I was really hoping to see it start to creep up right away. And that's what I was hoping for. I want to see some inventory out there. It did fall off the last couple of weeks. This week it went up just a very little bit. And remember, we're talking about a really large area of homes. We're talking about San Joaquin County, Sacramento County, Placer County, El Dorado County. So we have this giant area of homes, and there's just very little out there. I mean, we're under 2,000 available homes out on the market. We're about 1,500 homes. It's not much to choose from. So I was hoping to see that go up, right? The blue line, pending sales, the buyers are coming out. I've mentioned many times that a great time to get a good deal is when it starts raining. We just haven't seen the rain. We haven't seen a real winter where we're socked in with fog for months on end. So, the buying season really never stopped. Yes, it went down quite a bit, but I think it went down more to the fact that there just hasn't been available homes and these buyers haven't been able to find what they want. A lot of that going on. So, of course, that's been driving up our home prices here. Again, I said it last week. I used the term bubble. A lot of what's going on looks a lot like what happened back in the last bubble. Now, is this a bubble? Well, of course, there's going to be a lot of people that will come out of the woodwork after the fact, say, well, I told you it's going to be a bubble. I don't know. I don't want to be a panic peddler and say we're in a huge bubble. The fact of the matter is we have a housing shortage, and that causes prices to go up. The last time we had a bubble, or the last bubble we were definitely in, wasn't due to a lack of homes. It was easy money, where we had liar loans and anybody could get a loan. So we had way too many buyers for the amount of homes we had. Sound familiar, right? Except that the buyers were generated falsely by false money or easy money. We don't have that. It's still very difficult. It's not very difficult. It still makes sense. Good underwriting is happening right now. Underwriters and banks are really only giving loans to people that really qualify. Now, we're pushing that envelope a lot. So we're still looking at debt to income ratios over 50%, which means that over half of your income is going to pay your bills. So that's pretty high. But, a lot of people manage that. So there is that. And I know there's a lot of talk about the amount of people that aren't paying their mortgages, aren't paying the rent to landlords who then aren't paying mortgages, and what's going to happen there. That it will be yet to be seen. I still think that the government's going to step in with a lot of this or put moratoriums on evictions, even for homeowners. So we'll see. Hopefully it doesn't come to that. Hopefully the economy turns around and does great. But anyway, that's kind of what I see on that end. So one of the things I'm looking for here is the spread between the amount of homes on the market versus the pending sales. Remember, we've been in an inversion right here for quite some time. This is not the normal way to look at things. Normally the blue line is well below the green line. That's normal. It's inverted. So back in October, that's when we had the biggest spread of almost 2,000 homes difference. Well, we're getting really close. We're about 1,800 homes spread right here between the amount of available homes and the amount of pending sales. So it's still a difficult time to be a buyer, but a fantastic time to be a seller. In fact, if you really wanted to hedge your bet, and I kind of said this during the last bubble that we had as prices went up and up and up. At one point, I said, the smart money would be to sell your house right now, go rent something for a period of time, wait for this market to crash and pick up a great deal. Now, of course, that takes a lot of confidence that the market's going to crash, and who knows if it will. And second, rent rates are really high right now. They're tremendously high. I'm shocked at how high they're going. So I guess I will say that to say, well, be careful if you're going to sell and rent, because, make sure you have a place to go and you're happy with that. All right, I want to show you my other charts. If you've been watching this for a while, I do have another chart here. I don't share it very often. Let me bring that up in here and show you some different data points that I found kind of interesting in the last couple of weeks. Been waiting for a trend to emerge and definitely have something going on here. Now, I will say that the way that MetroList has been collecting data has changed a little bit. They have a lot more data points, a lot more counties are now reporting, and that's reflected in this chart. But look right here at this light blue line right here. This is my inactives. So we're going back about the middle of January, a huge amount of inactives. In other words, a lot of homes taken off the market. Right? So that's one thing. Two, the green line right here, back on the market. Now, the difference between the two, back on the market is if the same agent has the listing, takes it off the market, maybe it went pending and then went back on the market, right? It's back on the market. A true inactive is when that agent no longer has a listing. It goes into a canceled mode. So we have that canceled, then maybe another agent brings it back. Or sometimes the same agent if it's canceled and brought back rather than just a pending and then brought back. So that went way up, as well as we do have a lot of price reductions. And that's kind of interesting to see that many price reductions in a market that is supposed to be a huge buyer's market. So what that tells me, there's still a lot of agents out there who are even sellers, responsible too, who are bringing homes on the market way over what they should be, hoping, and I hear that sometimes. I will give my buyers good advice. Say, okay, this is where your house needs to be listed at, and they'll say, well, Kevin, I know that you say it's worth $450, but let's put it on the market for $500 and see what happens. Well, I tell you what's going to happen. You're going to become a statistic right here for a price reduction. Nobody's going to show up to the house because the buyers are smart and they will wait to see what happens, and they'll wait to see a price reduction before they make a move on your house. So that's just the way buyers work right now. They don't bring in low offers. They sit back and wait for you to get realistic as a seller. So that's what's going on there. Anyway, I wanted to show you that one. So let's talk about rates real quick. All right. So for the third week in a row, rates have held absolutely steady. Now, it's funny, interesting, looking at Freddie Mac's data, that's what I'm getting. Third week in a row, absolutely steady. Heard yesterday one commentator stating that actually rates have gone up, that this was the third week in a row that they've gone up. Don't know where that data came from, but I'll throw it in there as a point of interest. And the point was that right now, there's a whole lot of wait and see. If you notice, the stock market has been kind of flat a little bit, hasn't done a lot of movement. Everybody's waiting to see what's going to happen with stimulus, what the government's going to do. So right now, we're just sort of in a holding pattern, waiting to see what happens with rates and stuff. So that's it for the report this week. Hope you guys have a great weekend. Talk to you later. Bye.